Africa Financial Summit, which ended yesterday, the Institute of International Finance released the overview and forecasts for Sub-Saharan Africa's main economies. The report says growth for the 7 countries the IFF monitors, that is South Africa, Nigeria, Kenya, Ghana, Tanzania, Zambia and Cote d'Ivoire, remains solid and is forecast to be broadly unchanged at 4.8% for 2013. The author of the report, David Headley, is with us on the program. Good to have you. Thank you very much for being with us. Let's start off by talking about the work of the Institute of International Finance. What do you do?
We are sort of an organisation where we describe ourselves as the Global Association of Financial Institutions. We've been around for sort of about 33 years, something like that. The main focus of our work has always been on macroeconomic research and analysis on emerging market countries. And more recently, and it's a very growing large area of our work, is on global banking regulation. And here we sort of, for want of a better description, we advocate on behalf of our emerging market member institutions. And because a lot of the stuff that's been coming out of the Basel Committee might have sort of unintended consequences on emerging market banks. And so we have sort of groups of our members get together and discuss these issues, and we'll take the concerns of our members back to the Basel Committee.
Let's now focus on the Africa Financial Summit. What's been happening there?
It's actually our second summit we had. We had our first one this time last year in Cape Town. It's the first time we've done it in Johannesburg, and as I say, it's the second one we've ever done. The idea of it is to get our members in Africa, and we have, I should say, we have 475 members around the world who are members of the organisation, and we have 30 of those are from Africa. And the idea is to get those members together and sort of our global firms who have an interest in Africa, to get them together to discuss about issues about sort of Africa, about banking and finance. So we had sort of 4 different panel discussions. The first one was about deepening financial markets in Africa. Another one was about just general banking issues in Africa. And then on the second day, we talked about what was needed to build sustainable growth in Africa. And then the fourth panel discussion sort of talked about investing in Africa. So it was those type of issues.
Okay, so it's a broad-based discussion. Now, you authored the report, Sub-Saharan Africa, talking about growth. You know, in the previous, well, this morning, a bit earlier in the morning, like we actually spoke about and highlighted Ghana and how well they have been doing in terms of growth. Talk to us about your report and some of the findings.
It's interesting. I mean, perhaps sort of start off with Ghana, as you mentioned it. I mean, it's been a great success story. You know, it's discovered oil. It started producing oil sort of fairly sort of not very many years after discovering, so that was all very efficient. It pushed growth up to something like 14%. I think that was in 2011. And now growth, you know, it's slowing, and you know we're expecting growth of about 7%. So you know, as a growth story, it's very good. But it's the country in the region which, you know, we do have a few concerns about. In particular on the budget deficit side. They're running a very large budget deficit, and you know, it's one of their big challenges to reduce that budget deficit. And they've also got a fairly large current account deficit, which is in excess of 10% of GDP. And you know, that's a concern. But you know, when you look behind those numbers, it's not really quite so bad, because I mean, partly the deficit had widened because of export earnings, but it's also mainly to do with all the capital imports which have been come into the oil sector and sort of as far as the boosted development process.
You talk about budget deficits. South Africa has a budget deficit itself. Looking at the growth and in the context of the report, let's talk about South Africa. How are we performing?
Well, South Africa, as we all know, sort of is not growing as fast as other countries in Africa, and you know that's to be expected. You know, it's a globally integrated economy. It's a much more developed economy. You know, it's gone through the stages from sort of from raw materials to manufacturing to services, and it's sort of largely a service-based economy. And so it is much more difficult to have growth of at the same rate as sort of countries in other countries in Africa which are really sort of more in a developmental stage. Now, can we get back up to sort of pre-recession levels of growth of sort of 5 to 6%? I think over the next few years that will be very difficult.
Yeah.
It will require some structural changes. And of course, what's happening at the moment is very much affected by what's going on in the global economy, and particularly what's going on in Europe. So, you know, we're seeing sort of growth perhaps moving up towards 3% next year, and a little bit more, you know, 3 to 3.5% the following year.
Is that acceptable? I mean, should we be doing better?
I think obviously sort of the NDP recognises we should be doing better.
Absolutely.
Because it's needed to create employment, reduce poverty, but it requires these structural changes. They've all been sort of very well highlighted and very well analysed in the NDP, which I think is a wonderful document. You know, but obviously sort of it needs to be implemented. Minister Manuel was at our conference yesterday and highlighted sort of what needed to be done and what was being done. And I think it will be very important over the coming years for the government to ensure that the key aspects in the proposal, I think it's a proposal, it's not a necessary policy, are implemented.
Okay. Let's also look at products that international companies look to Africa for, besides minerals. What else is it that Africa offers?
Yeah. I think so Africa can offer a lot. The biggest problem, I think, is the reliance on commodity-based exports. And of course, you know, you get swings in prices and sort of swings in external demand. And of course, it doesn't create growth in the sense of creating employment growth. So I think what's very important in Africa is to rebuild the infrastructure, build or rebuild the infrastructure, both, because that is really still a major constraint on growth. And, you know, I think the growth could be a lot higher in Africa if they can sort out sort of particularly the power and transport sort of infrastructure inadequacies in most countries. What's encouraging is I think there's a lot of plans which are now being implemented. I mean, Nigeria is a very good case in point. You know, the privatization of the power sector is a major step forward. I mean, their power sector is grossly inadequate for the size of the economy. And it sort of has a huge burden of cost and inefficiency on industry, and it really stifles the growth of manufacturing, and that's where the employment growth is going to come from.
Yeah. All right. Just you know, I suppose let's wrap it up and talk about how the people that work in the financial area, how do they benefit from the work of the IIF?
You're talking about sort of our member firms.
Yeah.
Well, what we do, we sort of provide them with a sort of the analysis and research on the macroeconomic backgrounds. And they need to understand the policies. They need to understand the sort of the outlook and the risks and everything like that for them to be able to invest in the continent. Now, whether it's a bank sort of just providing lines to other banks, or it's sort of investors bringing in foreign direct investment, or it's portfolio investors. You know, our members need to know the opportunities and the risks, and our work really is about sort of providing them sort of with what we see as the opportunities, where the opportunities are and what the risks are.
All right, good. And the report's obviously credible. How do you compile the report? Is it from just generally figures that the countries are releasing?
Well, what we do, all the countries that we cover, and as you said in the introduction, we cover 7 countries, and that covers, I think, something like 65% of Sub-Saharan Africa GDP. What we do, we go to the countries, every country, we speak with the policymakers, we speak with people in the private sector and banks, we see what's going on the ground. And then based on that sort of, and with all the data we have, you know, we'll put together a report and forecast over sort of 2 to 3 year time period.
Good. Thank you for talking to us. Thank you very much for being our guest here on Morning Live. David Headley, the Deputy Director of the Institute of International Finance. Let's take a look at your market indicators now, starting